Summer is in full swing, and Thomas is back with his monthly buy list, and this time they are all buy the dip opportunities. Joining us today is MarketBeat analyst Thomas Hughes with his list of 5 stocks to buy in July. Thomas, this is one of our favorite monthly segments. You're on every month with a list of the 5 stocks you are watching most this month, and this time all of these names are on at least a little bit of a pullback, some of them an extreme pullback. We're going to get into that in a minute, but I just want you to start off talking about what you are expecting in the market this July.
Well, right now, July's kind of it's a weird time for the market. Not only are we coming off the SAS, the SaaS apocalypse, implosion from earlier this year, and stocks are been depressed because of that, but it's summer trading environment, so we just have less volume in general, lots of opportunity for volatility, people kind of just waiting to see what happens. But as July, is coming up right now. The Q2 earnings reporting season is going to begin mid-month and really gain momentum by the end of the month. And I think that will provide catalysts for the market. If not an actual catalyst for upside right now, it'll at least provide catalysts for support. I think that the AI trade is still going to be very strong. I think that we'll see, the broadening AI spending, but also broadening strength in other sectors as well. That story's still been in play. Labor markets are still pretty strong. Plenty of concerns macroeconomically, but labor data is very strong. Spending and income have been very strong. So I think generally speaking, the reporting season will be providing, catalysts for the market.
Yeah, those catalysts could be coming, and that is why now is the time to be looking at the 5 names that you have for us this month. Again, a lot of these are on a pullback right now. And before we get into the first name, I want to talk about why that pullback exists for a lot of names, especially in the tech sector.
Many of these stocks have seen pretty explosive upsides. So there was opportunity for profit taking. I think that the profit taking and the intermarket rotation has just been taking a little bit longer than what I expected and what many other investors have expected. But I think generally speaking, that AI, that tech trade is still very much in force.
All right, well, these are the 5 names you are looking at in July, but I know you also have a list of 10 stocks that you are looking at this summer as all buys before the fall season hits. If you want to take a look at Thomas's buy list for the summer of 2026, make sure to check out this free special report by scanning the QR code or clicking the link in the description. Again, it's a list of the 10 stocks Thomas is most excited about for this summer and entry points that are all important to look at before some of those catalysts could come later on in the fall. Well, Thomas, let's get to this list, your July buy list. What is the first stock you are looking to buy in July?
Well, the first one is Amprius Technologies. Now, this isn't an AI trade. It is a tech trade. But what's happening right now is that same factors I was talking about before with the summer trading and between earnings reporting seasons and just having some market angst and potential for downside. But within that, a short seller report came out, kind of raised some concerns, some valid concerns certainly, but ones that I think may be overblown, caused the stock price to correct pretty significantly. But now we're back down to what look like pretty attractive levels. This market is channeling to the upside. We're now back down to the bottom of the channel, showing support at these critical levels. And to me, it looks like a pretty good entry point. The upcoming catalyst is going to be the fiscal Q2 results. We're expecting to see triple-digit upside, affirming that outlook for ramping production, ramping sales, ramping revenue, and the pathway to profitability. If we get that, this stock price could easily get back into the low 20s where it was before. Assuming that is another good report, we should also see the analyst sentiment trends firming again, potentially lifting that high-end target and possibly getting this market up to new highs.
Now, let's talk a little bit about what has happened in those past couple of quarters for Amprius. And we all know that phrase, that past performance is not predictive of what's going to happen in the future. But I think it's important for investors to know what the stock price did after the last quarter earnings report.
Well, this stock price has been volatile over the last, 18 months, and that's just because of the swelling outlook for revenue and the pathway to profitability. So this is an emergent tech company. They switched from being research to being commercial. Now they're ramping capacity and they're ramping production, they're ramping sales. That's all being reflected in the earnings outlook. That's driving significant upside swings. But in those swings, there's also potential for profit taking. And so then once those peaks are hit, we see pretty significant downside. But within that, it is an uptrend. Lows are progressively higher, highs are progressively higher. So right now what I'm seeing is a technical entry point with an expectation for us to at least be retesting the recent highs, if not setting new ones.
Let's talk about what the analysts are saying about Amprius Technologies, because it seems that the upside is very much there for analysts. The most recent one we're tracking is at the beginning of June. We have a price target of $33 on this stock. Although also also looking, there's not a lot of analyst coverage yet. And I think that shows this is still a very new stock.
Well, right. There's not a ton of analyst coverage, but the ones that are covering it are bullish. Sentiment is firming as the story progresses. Their coverage, their sentiment directly refutes the short sale interest. So that's part of the volatility. That's part of the upcoming catalyst. So this Q2 report is going to prove one of them right or wrong. And in that, I think that it will be the analyst proven right, and there will be a catalyst for higher share prices.
Any concern for you looking at the short interest on this one? I know you mentioned the short report when you first started talking about the stock. Right now, the short interest on this is hovering around 17% of the float. Is that something that's concerning to you, or is that to be expected in a stock that's volatile like this one?
It is a concern because it can limit upside and it can actually pressure the stock lower if they decide to start piling in, but also it provides opportunity. I'm still bullish on this story. I still think the story is progressing the way that I had been expecting. So within that, the short interest to me is fuel for short covering rallies, will help lift the stock over time as these shorts decide that that's just too much risk for them.
All right, well, let's move on to the second stock that you are watching in July. AMPX, a very familiar story, one that has made your monthly watch list many times. What is the second name you're looking at?
The second stock is Oracle. Oracle share price is just getting punished for its spending plans. And to me, this is just a real massive market disconnect. The market's focusing on these near-term increases in debt and dilution and treating Oracle as if it's an emergent tech company when it's actually a blue chip tech company. So yes, it's raising debt and it's diluting shares to build out data centers, but it's not doing this aimlessly. It has plenty of backlog to drive the need. So this is an execution story. Right now, the near-term fears are causing the share prices to be greatly discounted. This is an historic entry opportunity, I think. I think over time, as Oracle is able to convert that backlog into revenue, the share price will reclaim its recent highs and then move up to set new highs.
Yeah, this is a name you've also mentioned before. And again, like you said, the market has absolutely been punishing this name. Oracle has been down so much, and it's kind of that key pullback story with the tech pullback that we saw in June as concerns about overspending of all of these bills coming due for some of these companies that are investing so much in the AI infrastructure build out. Do you think that those concerns are valid? I know you and I did a full video talking about just this point, but just in this video, I want to talk a little bit more about the concerns about how much spend is happening with companies like Oracle.
Yeah, I mean, it is a concern because it is a lot of money. It is impacting their balance sheet and their cash flow. But again, this is not an emergent technology. This isn't a company saying, hey, man, this thing is cool and we're going to spend billions on it and hopefully it'll work. And if we're lucky, it's not a Betamax. This is an actual real thing. There's demand for these data centers. There's demand for high capacity compute in the realm of Oracle and the hyperscalers. Oracle is the hyperscaler serving the other hyperscalers. So its demand is being underpinned by Google and Microsoft and Amazon AWS, and that really has de-risked the outlook. So again, there's near-term headwinds, but this is really an execution story that's going to play out over the next 2 to 3 years. Starting next year, they're going to be converting the backlog into revenue into cash flow and earnings, and that's going to change the entire outlook.
Yeah, this is a name that you've been bullish on for a while. I want to look at the chart for a little bit too about the entry point here and this continued downtrend that we've seen. We talked about volatility with AMPX. You can see that volatility with Oracle as well, where we see the downtrend and then it spikes back up and then we see the downtrend again. Right now, this stock is sitting down 25% over the last year. I want to talk about the time horizon of when that recovery could happen for Oracle. Could it take a while before Oracle recovers simply because of that big debt that we've been talking about?
So it'll probably be about 12 months or so, maybe 18 months before we start seeing aggressive revenue or backlog conversion. But over the subsequent quarters, what I think we're going to start seeing is one, the backlog will continue to grow, but two, we'll start getting more clarity on when the conversion will start happening. And that will be a bullish catalyst for the market. So yes, we might see the stock price wallowing for the next couple of quarters. But I think by latest mid 2027, this market will be in rebound and recovery mode.
Yeah, I think that's a lot of investors' question is where is the bottom at? Can this continue to go lower? And it sounded like you said, yeah, that's a potential. There could still be some volatility in here. But when I look at what the analysts are saying too, they seem to be leading this stock quite a bit higher on their 12 to 18-month estimates too.
So volatility, yes, but I don't think there will be much lower stock prices. If you look at the outlook right now, this stock is trading at about 3 times its 10-year earnings outlook, which is pennies on the dollar. Based on this outlook, given the expectations for execution and backlog conversion, this stock price could rise by 4, 5, 600% over the next 5 to 10 years.
All right, very bullish on Oracle's future. I'd love to hear from viewers in the comments. Are you also bullish on Oracle long term, or are you skeptical about paying off this a massive amount of debt that this company has? Let me hear from you in the comments. Okay, let's move on to the third stock on your July buy list, Thomas.
Yeah, that's Snowflake. Snowflake has been kind of this slow grind for the last year. They had a CEO change. He reinvigorated the business, reinvigorated growth. And right now, we're seeing that being reflected in their results. They're reaccelerating, they're improving margins, they're raising guidance, all being driven by AI demand, demand for data handling and data safety and data processing. And that's all being reflected in the stock price. So right now, Snowflake is still within its long-term trading range, but the most recent price action is this really nice spike up to the top of the range. We're consolidating near the top of the range in a way that we haven't done for years. To me, it just smacks of a continuation signal with the AI trade, especially for Snowflake and Inference coming up, expected to continue to accelerate. I think that the subsequent earnings releases are going to affirm the trend that's in place, which is just strong results, better than expected, reacceleration, strong, robust guidance, and help keep that stock price moving higher.
Yeah, let's talk a little bit more about that massive spike it saw because it's very impressive. What led to that? What was behind that?
It was the last earnings release. They outperformed solidly on the top and the bottom line, showed impressive backlog growth, and gave impressive guidance that just affirms that the SaaS apocalypse fears of AI disruption are really overblown. It may still happen in the future, but what's happening right now is that these established software companies are implementing AI in a way that's driving their business. It's driving utility for their clients. It's improving demand and their own profitability.
Let's talk about what Snowflake is. And we've done plenty of videos over the last year and a half or so as you've been bullish on Snowflake for a while. Let's talk about what this company actually does.
Well, it's data handling. It provides data management, data storage, data access. It's unified across clouds. So what it really does is provide just a comprehensive means for enterprises to handle and store their data in ways that's easily accessible but also secure.
Now, Snowflake isn't a name that's been lumped into that SaaS apocalypse software, downfall story as much as some of the other names we're going to talk about soon. Is this really truly a software story, or is this a part of that AI story too?
Well, it's kind of both. It's AI infrastructure, but this is the software end of it. So Snowflake is providing a software platform that's helping with the data management, with the data storage, with the data security, and with helping enterprises operate in a cross-cloud environment.
Okay, so let's talk about really quick the analyst forecast on Snowflake before we move on. It had that massive jump that we talked about. And so now it's soaring quite a bit closer to where the consensus price targets are. It has pulled back a little bit. So it does look like, based on the consensus, there is still some upside here. But what are those trends? Are we seeing any revisions to the upside for this one? And thoughts about getting in on the stock when it's at this level? This is the smallest buy the dip opportunity on your July buy list.
The trends are very bullish. The analysts are lifting their sentiment ratings and their price targets. They're leading to the high end of the range. Right now, the consensus is a fresh high, fresh long-term high, and the high end of the range adds like 30% to it. So right now, what I see is this market is strengthening and getting ready for another surge. I think that will be triggered by the next earnings report.
All right, let's move on to your fourth stock that you were looking at as a buy in July. And I kind of previewed this. We're getting into that software space quite a bit now.
Well, right, that's Salesforce. Salesforce, again, is just getting hammered, I think, for no reason. It's not the fastest growing software company, but it's the biggest. So we can't expect it to grow at a 30% pace. It's accelerating at double digits right now. It's being underpinned by agentic AI. It's improving its cash flow. It's improving its margins. That's being reflected in its buyback program. It's increasing its buyback. It's aggressively buying back shares. I think all of these things are going to happen long into the future. So right now, the stock price sell-off is just it's irrationality to me. It's the market focusing on fears versus reality. I think that once the summer comes to an end and the summer trading season turns back into the fall trading season, season, we'll see the market get more interested in this stock again, underpin support, and then get it back into rebound mode.
All right, I'm going to do some devil's advocates on this one because it's a name that analysts are really pulling back on. The most recent analyst price target right now is a major downgrade down to from 253 to 166. And that's pricing it pretty much where it is right now. And this is really on that very low end of where the stock has been. What do you think about those analyst trends and why there are some members of that analyst tech community who aren't betting on the future success of this company?
I think it's just near-term caution. They're just wanting to see a really hot AI explosive growth story, and we're not getting it right now in this company. But if we look at the long-term estimates for growth, we're looking at sustained double-digit earnings growth over the next 5 years, still high-level single-digit growth for 5 years after that. Again, the forward P&E puts this stock at pennies on the dollar versus the long-term outlook. If you assume that this year's price to earnings multiple is right, which I think is pretty low for this company, we're trading at about 11 times earnings. That's about a 60% discount from where it used to be. Even assuming that that's correct, the long-term forecast suggests 100% upside from a 5x PE to 11x PE. Assuming the company re-earns its premium, the upside will go into 300, 400%.
That would be a big turnaround story for this stock for sure. I do want to mention those earnings are there. I think that's one point that is on the positive side for Salesforce is that their last earnings report was actually fairly strong.
It was good there. I mean, showing improvements, accelerating growth, double-digit growth. The guidance was a little soft. I think that was part of why the market didn't really get into it as well as it did. But again, I think that soft guidance provides potential for a catalyst down the road. The company has been showing momentum, gaining traction with agentic AI. So I see a high probability for outperformance in the future quarters.
Is there a possibility, Thomas, that there is still just a trying to figure out in the market of the impact AI is truly going to have on companies like Salesforce, on companies that have these strong software models? Are we still in that we're just figuring out exactly what this market impact is? And many people are kind of guessing on what that impact will be.
I think that's a good assessment. It's hard to know what's going to happen, but the way that I'm seeing it is these software companies have established networks, they have established businesses. It's far more likely for them to implement AI than it is for an AI company to come in and all of a sudden take over their business.
I'm also going to point out here that Salesforce is a name you've recommended on your buy list a few times. I added it to my Bridget's Buys watch list back in February on February 13th, and the stock is down more than 9% since then. And so this has been a buy the dip recommendation for almost half a year now, and it continues to dip even further. Any other comments on that, the kind of performance the stock has had throughout the year?
It is surprising. I thought we hit bottom earlier this year, but this is an example of a stock that's setting up as a buy. But it's hard to really pinpoint when the exact turnaround will be. So in this scenario, you buy low. If it moves lower, you can buy a little bit more. You're going to want to set yourself a limit. If it moves too far, too low, you're going to want to stop yourself at and just wait for a better time. But right now with the stock, it is at a fresh low, but still kind of moving sideways near this bottom, indicating a lot of potential for rebounding. I think it is still a pretty good time to get into this one.
All right. And if you want to check out that Bridget's Buys watch list to see how some of the stocks we talk about on this channel move over time, scan the QR code or click the link in the description. Again, there's a lot of really good performance stories on here. There's some not so good performance stories on this watch list. So take a look at all of the stocks on there. I usually pick one stock per video that we talk about to add to that watch list again, just to kind of track and follow how these stocks move over time. All right, Thomas, let's get to the last name on your list, and we are sticking with software.
Yeah, I think Zscaler might be among the best plays on this list. As a cybersecurity company, it's very well positioned for growth in the AI age. Its results affirm this position. Meanwhile, its competitors' share prices have all skyrocketed by triple digits since April. This one's wallowing because it has a company-specific issue, and that was it lost some of its key sales executives. That led management to issue some cautious guidance that caused the stock price to drop, where it's now wallowing at long-term support levels. What I see happening now is the company outperforming guidance. Even without hiring new sales executives, I think the company can still outperform guidance. I think when it hires its new sales team that'll be a catalyst to reinvigorate market confidence, also help reinvigorate the sales growth outlook and help get the rebound really to gain traction.
Yeah, I think the story here is a really interesting one because mainly what you said that the other cybersecurity stocks have rebounded. They've kind of separated themselves from the software story that we've seen with companies like Salesforce or even Microsoft. But many of the cybersecurity stocks have rebounded except this one. So clearly, there is demand for the product that Zscaler provides. The sales team is an interesting part of the story of why the stock price is down right now. It could also be why analysts are still very bullish on this one. I can't help but see how many analysts are saying this is a strong buy right now.
Well, right. The analyst response to the guidance was kind of to pan it. They think, the sales team is key news, but it didn't really alter the long-term outlook for them. Mostly what we've seen is reaffirmed ratings, reaffirmed targets that are forecasting a pretty robust upside. Now, compared to these other cybersecurity stocks, most of them have rocketed to fresh all-time highs. If Zscaler were to follow them, we're looking at a more than 100% upside just to get to the recent highs, and then potentially another triple-digit gain after that once we break to fresh highs.
All right, a smaller detail, a smaller figure to look at for Zscaler is looking at that institutional ownership. That's pretty low for a company of this size to see less than 50% of this company is owned by the institutions.
Well, institutional ownership is lowish, but it's offset by a high inside ownership. So altogether,
Hmm.
institutions and insiders are owning about 60% of the stock. I think ultimately, though, the institutions are pretty supportive of this market down at these levels. The more recent data shows them accumulating, underpinning the recent lows, underpinning support. With this in play and the analyst bullish, I see the market set up for a pretty hot rebound.
Yeah, I want to talk about what catalyst this company needs to turn the stock price around. What do you see happening in the near term that could change the stock story for Zscaler?
The two catalysts are going to be either one, hiring new sales executives, or two, issuing the subsequent earnings release. Either one of those are going to reaffirm the company's ability to grow and to sell its products and help reinvigorate market confidence. And that'll get institutions, analysts, and retail trailers back into the fray.
All right. Well, clearly, Thomas, you are still bullish on many of the software names out there that are on some deep discounts right now. Again, I want to hear from viewers in the comments here. Are you still a believer in a turnaround for software? Or are you skeptical that these companies are going to see a big recovery? I want to hear that in the comments. And if you want to hear some other thoughts on the software story and the potential recovery, make sure to watch this video. It was a really great conversation on where some of these software names could be headed. You can find that full interview here.